Hi, everybody. Jaden Bax here with Avenue Financial from out in Calgary, Alberta. I've been a mortgage broker for a lot of years, and this is a topic I'm very excited to talk about today with my cousin, Mike Parkinson from DLC out in Vancouver Island. How you doing today, Mike?
I'm doing really good, Jay.
That's great. I'm really excited to talk about this topic because it's something that I think the vast majority of mortgage brokers, bankers, everybody else probably doesn't talk about that much. And so today we're talking about the portability of a mortgage and what exactly does that mean, right? So, one of the really big selling points we think as mortgage brokers of working with a broker versus some of the big banks is the penalty, right? So we always talk about with the fixed rate penalty, just the way that we calculate that, it's a little bit different. And so there's a way to save some of that. But there's another way to save a penalty, and that's through porting your mortgage from your current home to the next home that you're buying. So you want to talk a little bit more about what that could potentially look like, Mike?
Yeah, so as you mentioned, Jay, portability means that you're basically taking your current mortgage with you and doing something with it, not paying the penalty to the new property. But it's not as simple as it seems.
No.
Just because your mortgage says that it's portable, and everybody's like, "Oh, I want a portable mortgage, portable mortgage." I'm like, "Okay, fine." Every lender's different on what their rules and regulations are for that, but you still have to qualify for the new
Yeah.
property income wise. You have to qualify for the property, which for an example, let's say you have a current mortgage and you want to port it to another property, but that lender doesn't accept that property. That means you can't port it. So it's not a guarantee. It's something that you have to still qualify for, and every lender is completely different when it comes to portability. Okay, will that lender port for 30 days, 90 days, 120 days? Will they allow you to blend and extend your term, which means that obviously you need more money because you're porting to probably a higher end property? Will they allow you to do that? Will they keep your current mortgage term where it is now and add another tier? Will they just blend to the end of the term? So there's a lot going on with portability, and it's just something that we try to explain to our clients. Like, look, there's no guarantees with the portability, but the lender you're in now allows you to do X, Y, Z, right? So that's important. So we try to get people educated on that, and just try to get them off the notion that, yeah, it's guaranteed. I'm just moving it to another property. I don't have to qualify or anything. So that's a little bit about that.
Well, and absolutely, and so Mike and I both work quite a bit with credit unions, for instance, and if I have a client that I'm sick of Alberta, I've made all my oil money out here, and I'm going to go out and live the good life in BC, and they're with my local credit union. There's no portability out there, right? Credit unions are always provincial, and more than just provincial, they tend to be regional, right? And so
Yeah.
even though you might have that portability option, like Mike says, it's all circumstantial, right? And so there's never going to be the product that's exactly right for you. But what we strive to do is tell you, like, listen, this particular product has this portability option. We don't know what the future is going to look like, but at that point, when you're looking to move and maybe thinking about upsizing or going to a different place or whatever, what we would do with you is sit down and say, look, this is what you could get through porting. This is the policy. It's a blend and extend, so you can go out to 25 years, this, that, and the other. This is the blended rate that they'll give you by taking your 2.5% from a year and a bit ago and blending it with the 4.5% that they're offering now. This is the blended rate that you'll get, and this is what it'll cost you over the 5-year term. Versus break this mortgage, this is the penalty you'll pay, and this is you starting from scratch, right? So the big thing about ports is that even though it is important to be part of the contract and understand it, it's not necessarily always advantageous to take advantage of it anyway.
No, and that's a good point, Jaden, because depending on where the interest rates are at the time, it may be more beneficial to pay that penalty depending on when that penalty is and get a different rate, right? There's like I said, there's a lot going on behind the scenes with portability. It's really important to have that and understand that you have it with a good lender. Some lenders don't port your mortgages, so be very careful what you're signing into. There's a lot of mortgages out there. Again, I really want to stress, don't come back to just the lowest rate, the lowest rate, the
Yeah.
lowest rate, because the lowest rate has stipulations, restrictions. Excuse me. So make sure you know what you're getting into. Sometimes having a little bit higher rate gives you way more flexibility in the long term, which actually saves you money. So.
Absolutely. And so I guess our call out to you today, if you're thinking about selling your home, thinking about upsizing or moving somewhere else, get us involved in the process early. Give us a call. Let's talk about what your portability options are. Talk about what the options on the market are right now, and help you get prepared to move on to that next house in the most financially friendly way possible.
Sounds good, Jay. That's a perfect point.
Yeah. Okay. Have a great day, guys, and we'll see you all next week.
See you later.